Vysya Bank. The management joins us, Mr. Jayant Mehrotra, CFO of the bank. Just right now to speak about the numbers. NII up 19%, PAT up a healthy 40%. So it's been a good quarter per se on all counts, not aided purely by other income, but that was up close to 15% in the session. But good performance. In line with estimates, of course, operating profit up on healthy NII and other income. Margins have stayed at a 3.5% or 3.3% kind of level. Mr. Mehrotra, thanks so much for taking the time out and joining us. As you were saying in the presser as well before this interview started, it's been successive quarters wherein you've managed to perform the way you have. Give us some color. 40% PAT growth based on the kind of net interest margins that you've clocked in. You think this is sustainable for the quarters ahead as well?
Well, at the outset, let me say that we do not give any forward-looking guidance. So that is something which has to be kept in perspective. But I think we continue to see good performance across all the businesses which we have been focused on. And directionally, we feel that we should continue to show consistent improvement in performance. I'm not saying whether it will be 30%, 40% or 50% profit after tax growth, but we should see consistent all-round improvement in performance going forward as well.
Jayant, morning. What would you attribute your NIM underperformance to? Because your reported NIM was lower by about 20 basis points on a sequential basis. What led to that?
Now, at the end of the third quarter itself, we had kind of given an indication that fourth quarter typically for us, we do see some contraction in margins. This is because this is the quarter in which most of the priority sector lending happens. And as you know, that priority sector lending does not attract similar rates as what normal businesses do attract. The second is that the cost of deposits, you are well aware that there was a significant liquidity crunch which was there for most of the fourth quarter. And the cost of funds went up marginally higher than our expectations. But at the start of the quarter itself, we had kind of indicated that there would probably be a pressure of up to 15 to 20 basis points. And that is where the margins were for the quarter. So we're not unduly worried about the margins for this quarter.
Okay. But you believe that there is an equal chance or an active chance that immediately in the next quarter itself, there could be some uptick? I'm not getting into specifics and not asking you to give me a guidance per se in terms of a number, but purely from the levels that you are in. Next quarter or the next couple of quarters, with immediacy, you think this performance can show some improvement?
Well, for the whole of next year, it's our estimation that we should be able to maintain margins for the current year, as we had in the year gone by. But in the first quarter, it would be difficult to anticipate at this point in time because there are far too many moving parts. We cannot have a clear direction in terms of how the liquidity is likely to pan out, what will be the pressures on account if liquidity squeeze continued. So what would be the pressures on margins on account of that? So it will be difficult to kind of give any guidance for the first quarter, but overall for the next year, we expect to be able to maintain margins.
Jayant, what about base rates, right? Because that is the question I'm sure everyone must be asking you. Are you looking at cutting them as well?
Well, our ALCO is scheduled to meet in the next couple of days. And this is something where we had kind of indicated that we would take a call based on what happens and what are the decisions taken by the bigger banks. And we'll take an appropriate call in the next couple of days.
What remains a growth driver? I mean, do you believe capital loans and essentially mortgage loans will be something that will drive growth in the next quarter as well? Because this quarter, from whatever little we saw, that remained the primary driver in terms of the growth engine. You think that continues for the next couple of quarters?
Well, the primary engines of growth for us have been the large corporate space in the wholesale side, the SME business, which has been a consistent outperformer for us. And that's a business which has grown quite significantly even in the fourth quarter. and mortgages as well. So these engines will continue to kind of fire in the near term. However, there is some focus, increasing focus, which is coming in certain other segments as well. On the retail side, we are looking at certain other options and business lines. We are looking at commercial vehicles, unsecured consumer, gold loans. And on the wholesale side, our international clients group business, which has been doing quite well over the last couple of quarters, we see significant momentum there, as well as the mid-market segment. We will see some good opportunities emerging there.
Jayant, one final word really. For the first time probably, I mean, and I agreed that your CASA ratio is probably the highest amongst the South Indian banks, but you have to admit that it's probably under a little bit of a pressure. You think you would look to actively up the CASA ratio northwards of 32%, 33% over the course of FY13? Is there a target that you set for yourself?
Clearly, yes, and I think that would apply for most banks. But the issue also remains that in expectation of interest rates softening, we feel that our CASA ratios should improve going forward in the next financial year.